All right, what's going on? And we are live. This is Travis Witherspoon from Carter Cow Capital, Carter Cow Trading on Facebook, Trade with Travis on YouTube, and obviously my Facebook profile. I hope everybody's doing very well. Happy New Year to each and every one of y'all. Hopefully, this can be the most prosperous and profitable year for you going into it. We made it. We made it in 2021. I'm very excited to be able to talk to each and every one of y'all for us being able to get started. With that being said, let's go ahead and get into the overall disclaimer. I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Now, understand that Forex involves risk. It involves risk of being able to make money, also involves risk of being able to lose money. So please keep that in mind. And understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you can end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well on this Monday morning. I have Monday, January 4th. This is the second trading day of the overall year. Obviously, Sunday at 5 p.m. was the first trading day, and the market started really moving from there and being able to get started. But with that being said, hopefully everybody is having a great day. If you're not familiar with who I am, my name is Travis Witherspoon. I have been trading for about 5 years now. I own Carter Cow Capital. What we are is a education company, being able to teach you how to be able to Forex trade from the ground up. We end up having college level style trading systems and styles of being able to teach you manually. And we end up having commercial style automation systems to allow you to be able to trade while you're actually going through and doing everything else like that. With that being said, I want to make sure that everyone knows that what we do here each and every morning is go about 30 minutes to be able to talk about some of the most pressing pairs, see if we can be able to find some things, mainly US based. We'll get into Bitcoin, we'll get into some indices, we'll talk about some metals and everything else like that if we have the time. But once as soon as 7:30 ends up hitting, we'll stop it. And then after that, we end up having a review episode a little bit later on throughout that day. So because this is the first portion of the year, I'm going to treat it as if when I'm speaking to each and every one of y'all that y'all do not know that much about Forex trading, in which that's fine. And being able to get started and being able to take a leap of faith sometimes is the most important thing to be able to do when you end up getting started anyway. So with that being said, I want to go ahead and bring you up to what I'm getting ready to show you, which is our Forex Bootcamp that we're going to end up having. It's our 5-day Forex Take Action course. This month is going to end up being from January 25th to January 29th. It's going to end up being from 9 to 10 p.m. each and every day. What we do in that session each and every time is to make sure that each and every person understands how to be able to trade from the ground floor, understanding what is Forex, how you can be able to use that, understanding terminology, helping you out when it comes down to brokerages, and being able to have a simple yet repeatable style and system that you can be able to do for its overall trading, understanding how you can be able to get good return on investment and being able to trade with other people's money. And then after that, we talk about our overall personal trading system and give you an invitation into our masterclass that we end up having each and every month, which is a 2-month system. So with that being said, very interested in being able to show you all of that other stuff and being able to get into it. But without further ado, let's go ahead and get into what's happening for the overall trading pairs and see what's going on from here. We call this our trade mechanics. We do this each and every day when it comes down to being able to do this. If you've been with us before, you know exactly what we're going to end up doing from this particular point. So and also, please remember that this video is going to end up being recorded. So with it being recorded, you can be able to obviously take a rewind, ask questions, do everything else like that, and be able to go from there. So with that being said, let's go ahead and switch over to the screens. Here we go. So what's happening today? If we look at the overall economic calendar, it's nothing but manufacturing market PMIs. And we have an OPEC meeting that's going to happen. It started off at 5 a.m. I'm pretty sure it's going to end up ending off a little bit earlier, well, a little bit later on today. But overall, the biggest thing that we're really kind of paying attention to is what's going on with oil, what's going on with the overall market. Understand that 45 has about 17 days, about 16 days left before we end up transitioning over to a new president, on President Biden. Then after that, we'll see how everything kind of moves on from there. So with that being said, the market is probably going to end up being slow from a news standpoint, but because this is the first day that everyone is getting back into the swing of things, it wouldn't be surprising to me at all if you end up seeing the market really start to move when it comes down to overall movement on overall movement when it comes down to the market and being able to understand about what's happening overall for trading. So please keep that in mind as we go through and take a look at everything else. Now, while I'm doing this, please make sure that you end up asking your questions. Obviously, if you have any questions, you can stop me at any point in time, and I can be able to answer those questions while we're going through. Remember, this is an interactive session. This is what we do for 30 minutes each and every day. That's the reason why we do it in this way. So here we go. Now, taking a look at this. If we look at what's happening with the overall market, we always start off with the U.S. dollar index and the big three. The big three in my mind is the U.S. dollar index. We end up taking a look at oil, and then after that, we end up taking a look at what happens with gold. We get into silver a little bit, but if we don't have time, then we won't go over silver. But what are we looking at? From a weekly perspective, the market has been going down since March. The reason why the market has been going down was because obviously the U.S. dollar was basically perceived to be very strong at the beginning of the pandemic, and because of the stimulus check and because of everything that ended up happening for social injustice, for everything else like that, and mismanagement of overall money, you can see that the market basically ended up going down. So at this particular point, the market has been falling. It ended up hitting a daily D extension at 11,650. If you don't know what a D extension is, that's basically Fibonacci trading. We do that inside of our masterclass. We talk about that inside of our boot camp. So if you're interested in being able to learn that, obviously, once again, please make sure that you end up tapping into our boot camps to be able to learn that. But overall, if we can see what's happening with the overall market, we can see that the market, it has fell down and hit the overall D extension at 11,650. Down, we're looking at the market falling down to 11,550 for the weekly move. The market is clearly in the buy zone, but if we pay attention to what ended up happening since 2014, we can see that 11,550 has been a strong support. So what does this mean? The market is going to fall. If we go back off of previous history and see what happened in 2014, the market ended up falling and hitting 11,550 and pushed back up. We've seen what ended up happening right here in 2016. Fell down again, pushed back up. Looked at 2017 to 2018 at the start of the presidency. Fell down, pushed back up towards this area. What is happening right now? We see that same thing happening right now. The history typically repeats itself when it comes down to trading. This is not anything that's not new when it comes down to overall movements. If I'm starting to get in the trades, if I'm looking at the U.S. dollar for its being able to get in the trades for its long-term movement, I will look at starting to keep my eye on being able to find low prices on being able to get in for its buying when it's right. Right now, I don't believe that it is right. I believe that we do have a little bit more areas for the market to be able to fall before being able to push back up. Once that happens, then I'm definitely interested in being able to buy. But at this particular point, I will only look at sell trades when it comes down to being able to get into the market at this particular point in time. So we take a look at this from a daily perspective. We can see that the market has went through 3 different phases of Fibonacci's. We can see that it's falling down at this particular point, and it's expected to fall down to 11,550. It's definitely in a push zone for its movement. We can see that the stochastic is not necessarily in the greatest position for its overall movement, but overall, we can see that this market is going to continue to fall down. So typically what I would end up doing is looking at high prices and see if we can be able to get high prices on a lower time frame to be able to get in. If you would have looked at that probably a little bit earlier on Sunday, or at least on Friday when it came down to movement, we had a counter trend line break to the downside for the overall movement when it ended up hitting the daily movement. Currently right now, the market is a little bit overextended for us being able to sell. So we should see that there will be a little bit more buyers kind of getting into the market just a little bit more. And then after that, they will kind of push the price up to give you a high price to be able to get back in. I'm not looking at buying at this particular point in time. And that means that remains to be the same on each and every pair that is U.S. based at this particular point. If the U.S. dollar index is weak, then I will look at being able to look at every other pair as being weak at this particular point in time as well. All right. So with that being said, that's where we are at when it comes down to that. U.S. dollar index is expected to be weak. Let's take a look at oil. When we take a look at oil, we end up taking a look at the Canadian dollar and try to figure out what's happening with that. Because typically when you look at the overall movement with the Canadian dollar and oil, they are very similar when it comes down to movement. Now, remember, going back to what ended up happening in March, the market ended up pushing all the way down to 0. And some markets actually end up going to negative numbers when it came down to how it ended up moving. From there, if we're looking at this overall position, we can see that the market has rallied back up and has pushed back up to normalized numbers. Currently, the market right now is at 48.38. Remember, we talked about this before we end up leaving off on break and saying that if you end up getting the market and buying up to 48.50 before the holidays, that would be a great price to be able to get out at. If you end up doing that, congratulations. You end up making a little bit more Christmas money and was able to use that for as a way of being able to get out. Now, at this particular point, if we're looking at the weekly is overextended as well. What does that mean? That means that we're probably going to end up seeing either consolidation or a little bit more downward movement when it comes down to this overall market. So we're looking at this from a daily perspective. Even though I would really like to buy at this particular point, the only position that I would like to buy up to would be at 50.32. We look at what the market actually ended up pushing out at earlier today. The market ended up getting up to 49.80. A little bit shy of that 50.32 number, and we can start to see that sellers are starting to get in a little bit early and start to push the market down. Is this a position that I will look at being able to get into for us being able to buy at this particular point? No, because weekly is a little bit overextended. The daily is not basically aligned with what's happening with the overall movement. We know that we're in the push zone and there's so little, we're going after so little and we have to risk so much to be able to go after this position. So oil is off the table. I wouldn't look at being able to trade on oil at this particular point in time. Now, we've been talking about gold for a while, and we end up catching a first move of oil of gold when it ended up moving up, especially when we talked about it with the Japanese yen. When we look at the Japanese yen, we look at gold, both of them ended up mirroring themselves very, very good. We talked about when we left off, we were saying that this market was going through a downward channel and we wanted this market to be able to push out of this overall zone and break out first. And then after that, once the market basically ended up retracing back, it would give us a chance to be able to get in and be able to buy up long term towards 2172, all the way up to 2300, where I think the market is going to end up going into for a week-to-week standpoint. Now, with that being said, what are the reasons why we're talking about this in general? Well, if you look at stimulus checks, you would think stimulus checks would be a good thing for the economy. Well, really and truthfully, it is for us being able to push money and allowing people to have a little bit more money to be able to push into the market. $600 is not going to end up cutting it when it comes down to the overall movement, just from a personal opinion standpoint. But with that being said, that money will be driven into the market in some type of way, whether if it's investments, whether if it's rent, whether if it's something else when it comes down to that overall movement. But what's actually happening is it's inflating the dollar. Because it's inflating the dollar, then that means that it's actually making the value of the dollar go lower. Because it's making the value of the dollar go lower, then that means that other valuable things that keep its value will end up remaining to be a little bit stronger. That's the reason why you end up seeing things like Bitcoin end up pushing up to $34,000 earlier, a little bit earlier when it came down to the overall movement from being at 17,000 to where it is right now. We see Ethereum getting up to $1,000 before it actually ended up moving, and seeing how that is going to end up performing. That literally just popped up on my screen and it's not moving for some reason. Okay, well, there it is. All right, so what are we looking at when it comes down to gold? We have this breakout of this overall position. We are looking at that for us being able to get in. If you didn't get in a little bit earlier when the market gapped up from basically 1911 all the way up to 1933, quite frankly, I would wait at this particular point. I think this market is going to roar today. And I think that if you didn't get in a little bit earlier, there's no worries on being able to try to jump in. I wouldn't try to chase this market. We know this market is going to have to retrace and basically end up retesting. That's what we're paying attention to at this particular point, especially if you did not get in throughout the overall time while I was moving through this overall area. So with that being said, I'm going to look at the 2 hour and I'm going to see how this market kind of reacts towards this overall movement. We can see that we're overextended right here, but that does not mean that this market is just going to automatically fall on its face. I do believe that this market will have a slight retracement. And once that slight retracement ends up happening, then after that, you can use a counter trend line break or whatever you want to do for us being able to get in. And then after that, you have a buying opportunity towards the overall spot. Okay, so that's what I'm looking at, and that's what I'm looking forward to when it comes down to this overall position and being able to get in. I'm looking at a low price in the buy zone, and then after that, I'll end up buying it up once it gets to that overall price. So gold in this particular case is a little bit overextended, but what does this mean? We can look at a pair like the US yen as a trading tool to be able to get in for us being able to sell if we have an opportunity for us being able to do that. And that's the first pair that we're going to start off with. We'll take a look at the euro versus the United States dollar as well for us, the overall pairs. But we're going to start off with the US yen at this particular point, and we'll go from there. So If we look at what's happening with the US yen, we start off with the weekly. What do we see? We see that this market has been making a wedge to the downside. This market has been falling down at this particular point. It has not been moving with strong conviction, but it has been moving down overall. Currently, the market is at 102.90. We were talking about once the market ended up breaking 105 and ended up pushing towards that 104 area, then you will probably see that this market will move down to 104.16 before having any type of movement towards the upside. And the D extension on this movement is expected to be at 99.18. And so if we're looking at this overall movement, we expect that the market is going to end up falling. We see that the US dollar index is weak. We see that gold is getting stronger. Okay, that means that the Japanese yen is probably going to end up getting stronger than what's happening with the US dollar. So we pay attention towards this overall movement. We can see that the weekly is going down, so the market is bearish. We want to see if we can find high prices for that overall movement. The market was in a sell zone, and we end up getting a counter trend line break, which was on the 20th, I believe. Let's see what date that was. Now, that was on December 28th. So if you got in at December 28th at 105, basically at right around the 134 area, 103. 81 area, then you would end up having a good sale. Currently, right now, you'd be almost up 100 pips towards this overall movement. We can see that the market is steadily moving down. It's at 41%, so it's a little bit overextended, but it hasn't got to a point to where it's just oversold. So if you end up getting in for its overall selling, I would remain in that sale and look for 2-hour high prices to be able to get in for us being able to find a low price for us. That we can see that the market is in the buy zone. I wouldn't look at being able to get in right now, but what I would wait for is, let's see what happens with this market. Maybe we might end up getting a high price. If we do get a high price, then once we end up getting that dip, once we end up getting that drop in price, then after that, you can be able to get in for that overall price as well. But we can continually see that we're making lower lows and lower highs. Right now, if we get a lower high, then after that, we can be able to sell on this one. If it breaks this overall high of this overall move, I wouldn't look at being able to get in at this particular point. I will wait for a clear counter trend line break for that overall movement. But right now, not really a pair to be able to get into at this particular point. If you would have made your move on Sunday to be able to get in, then that would have been a great position to be able to get in at that particular point. Taking a look at what's happening right now. If we take a look at the euro versus the United States dollar. I have my EAs on this one. If you don't know what an EA is, it's the expert advisor. Basically, what it does is it basically trades and it looks for overbought, oversold prices based off of whatever your system does, and basically it trades for you with good equity management and everything else like that. And I was looking at it, I was trying to wonder why it wasn't trading for me. And I looked at the overall market, and what I ended up noticing was very quickly was that I didn't turn it on. So I'm at the particular point of I'm kind of in the mercy of this overall movement and kind of seeing how this market is going to end up playing off at this particular point in time. And seeing what's going to end up happening with it. But overall, since this morning, it actually did take a couple of trades, but it didn't take the trades that I thought it was going to end up taking. But if we look at the overall movement, what is happening? Kind of the same thing that is happening with the US yen. We can see that the market is getting a little bit overextended. The D extension is at 123. If we go back to the overall weekly for this overall movement, kind of going back to what we end up saying with the US dollar index in general. We said that how the US dollar index is falling back down to 11,550. Well, we look at that overall movement from a weekly perspective, we can see that same type of area that ended up happening at the beginning of 2017 to 2018. Where the euro ended up getting very strong. We end up seeing a lot of consolidation. Then after that, the market basically ended up falling up. We're going back to those overall highs, and it wouldn't surprise me if we end up getting up to this point to where we see the market go up to at least 125.30 before making any type of movement to the downside. The market being in a weekly sell zone to me does not bother me at this particular point. The reason why it does not bother me is because I believe that the market is going to fall still as a whole to the downside. Give me a second. My batteries just died on my mouse. Give me one quick second. As soon as I say that, it actually starts to work. I'm going to turn it off real quick and we'll just talk through this. So the market's at 122.96 right now, meaning that if we're looking at where it is from a D extension, we're probably about 70 pips away from the market basically hitting its overall D extension, and then after that moving to the downside from a daily perspective. From a weekly perspective, we still got a little bit more upside movement that is still out there for us being able to take, and I'm kind of interested in being able to see how the market's going to end up moving from that particular point and going from there. If we look at what ended up happening with Brexit, remember Brexit was the biggest thing that was happening at the end of the year, and being able to meet that deadline, between the Eurozone and the pound, they were able to come up to a conscientious decision and be able to get a deal when it came down to that. So they basically end up pushing up at the same time, with the pound basically end up being rewarded with a huge jump to the upside of almost 200 pips from that overall movement. Now, if we're looking at this from a week again and kind of seeing what's happening, we see that we end up having more of a strong move to the upside, at least at the beginning portion of the day. And we're literally not that far away from, we're about 200 pips away from the extension for that overall movement going back up to 2018 highs. If we go to the daily D extension, currently right now, we can see that we have more of a morning star that's starting to show up. And if we zoom out, we can see that the D extension from here is about another 70 pips away. So even if we look at the market and see that it's a little bit slow, I still expect that the market is going to end up pushing up. I think that the reason why the market will end up falling a little bit is just because the market may be a little bit overextended for buyers that are trying to get into the market right now. We can see that the market is definitely in the sell zone at this particular point. But to me, all that means is that we're probably going to see a retest of this overall movement right here, and then after that start to push up. And what I mean by that is that if we just zoom out, we can see an upward channel. What's happening right here, we can see that the market end up hitting right here, and basically end up falling down from this channel, but end up basically pushing back up a little bit earlier from that particular point. And I've seen this a little bit earlier on Sunday, and that's why I was kind of upset about myself, because I didn't turn my EA on, or I didn't click on allow live trading, because I thought I was going to end up getting more of this push towards the upside, which I didn't. So I may start off with a little bit of a loss going into 2021 for my overall starting of trading, but I'm only interested in buying at this particular point. I'm definitely not interested in selling when it comes down to this overall trader. Okay, let's take a look at one more other pair. Let's take a look at the pound United States dollar, and then after that we get into the indices real quick. If we take a look at what's happening with the pound United States dollar, going back to what we just talked about with Brexit and how that kind of affected the overall market, we can see that from a weekly perspective, this market is still considered to be bullish, and we end up having a huge push up for the last 3 weeks for its overall movement. And we've seen a lot of volatility for us, like indecision candlesticks and everything else like that, because of what was going to end up being the decision. How was the market going to end up reacting if a deal was not going to end up being struck? Well, a deal was struck. We end up breaking out of this consolidation. We're starting to see that push up to the upside, but we definitely see that the weekly is in the sell zone. So eventually, we're going to end up seeing the market basically move to the downside. The question is that going to end up happening this week? I just don't expect that it's going to end up happening that way. I think that we're probably going to end up seeing more stronger movement to the upside, and eventually start to go up to 138, all the way up to 143 before the market starts to stable off and be able to go from there. So if we go to the daily, when it comes down to this movement, we do have a counter trend line break, with the market being in an overall push zone at this particular point in time. We can see that we have an indecision candlestick starting off, and we see that the market is at 74% for it being able to move. What does that mean? That means that the market is a little bit overextended. I just don't think that the market is going to just fall down and be in the US dollar's favor. The question is, why would it? Why would that end up being a reason for the US dollar being able to push up at this particular point? I just don't see anything that is allowing the market to be able to push up, aside from it just being a new year and people starting to be able to get in for its retail trading. But overall, if you're looking at being able to trade this, I am still looking at upside movement to 138.50, all the way up to 138.85 for that overall movement. If we're looking at it from a 2-hour perspective, we're going to see that the market is basically falling down at this particular point. I will look at low prices to be able to get in. If you can find a counter trend line break to be able to get in off of this movement, and be able to push back up, then I think you'll be good for us over that, for us that overall movement. All right, now let's take a look at the indices real quick as we get into this. And when we talk about the indices, we look at three different pairs. We look at the US 100, we look at NAS 100, US 30, NAS 100, and then we look at XPX 500, and we'll get out of here real quick. And that'll be it for the first day, being able to go through this. So overall, if we're looking at trading this, we can see that NAS 100 end up hitting a very nice W pattern, pushed up to the upside, broke into new highs. Currently, right now, everything that we're looking at is a new high and a new higher level when it comes down to the market. Currently, the market is at 12,953. The market is expected to go all the way up to 14,320 for its overall movement towards the upside, but we can see that the market is getting a little bit overextended at this point as well. So what does this mean? Typically, Sunday to Monday trades are the biggest push when it comes down to any type of indices market. If I'm looking at being able to trade this, the question would be, can I find a counter trend line break on a low price in the 2 hour? If I can find that, then I'll be able to get in. If I don't find that, then I'm not interested, and I'm not interested in being able to get in. Well, if you got into this a little bit earlier yesterday when it came down to this movement, you would have found this strong movement right here. And quite frankly, you would have caught all of this from 12,885 all the way up to 12,945, right around 70 points for its overall movement towards the top. Don't be afraid of being, I wouldn't chase the market right now. Remember at 9 o'clock, 9:30, this market ends up having strong movements to the upside and to the downside. I think that what will end up happening is we'll probably see the market start to fall a little bit. It may end up falling back towards the overall position again and retesting and then starting to push back up. Or if it does fall all the way to this position, you can see that this market may end up falling all the way down to 12,745 before falling back up. But I will say this is one strong position first. Then after that, we can see that when it comes down to point of control and low volume, when it comes down to buying, we will if the market falls below 12,850, I'm not interested in being able to get in until it gets down to 12,745. If the market continues to push back up and continues to keep on going up, then you should see the market really start to push up and continue to move up towards the extension because the market is in a push zone. So we got a couple options here. I'm not chasing the market on this one. If the market falls and gives me an opportunity to be able to get in, then I'll get in. If not, then I'm not chasing it. It's too early, and quite frankly, we want to make sure that we end up getting a strong footing for this overall movement towards the monthly. US 30 is showing the same thing, and we can clearly see that we're in a sell zone at this particular point. If we go and we take a look at what's happening based off of the daily, we want to be able to buy all the way up to the 32,520 area. The market is moving smoothly from that overall position. Once again, it's getting a little bit overextended. Typically, US 30 is a leader when it comes down to how the market basically ends up moving towards this position. What I would look for in general, it's waiting for the market to be able to fall and giving me a 2 hour low price. Once I can get a 2 hour low price, then after that, I'll look at being able to buy. I would take this as a position trade. As a swing trade. I would place my stop below 29, probably below 2,900, and allow this to be able to move. That means that you don't necessarily have to risk a lot for this market to be able to go up towards this overall position, but you will make a lot if you're patient enough to allow the market to be able to move. Now, from this overall position and being able to get into it, once again, I'll wait for the 2 hour to be able to make a move and be able to go from there. Now, if we was in a different position and I didn't know where the market was going to end up going, then I would look at being able to hedge. Speaking of hedge, this is something that we talk about a lot. This is going to be something that we talk about going into each and every month. This month, we're going to end up doing it on what date? What's that? We're going to end up doing it on January 15th. For January 15th will end up being Friday. That will be a one-off session. That one-off session will end up being 2 hours, being able to teach you advanced hedging strategies. If you're interested in being able to learn a little bit more like that, all you have to do is go to cartercowcapital.com/start here to be able to sign up for that hedging system, and we'll end up talking about that. If you're interested in being able to learn a little bit more about that, that's something new that we're doing this year, and we talk about that especially with the people that have went through the boot camp and understands when it comes down to trading. This is a different style and a different thought process of being able to trade from there. All right, so Let me hurry up and quickly get through this. Same deal. We can see that the market is in the sell zone. It wouldn't surprise me if the market falls this morning. And if it does fall, I expect the market to be able to fall down to the 30,500 area. If it does happen like that, then after that, look to be able to buy up and be able to go from there. I'm only looking at buying. I'm not necessarily looking at selling, even though it's predictable that we can see that the market may end up falling for the overall retracement. If you're looking at being able to sell, I will only look at being able to scalp the market from that overall position. But what we will start to see is this market get into the sell zone and get into the sell zone on the daily and get into the sell zone off of the 2 hour. We can start to see that a little bit now. Which means that we may end up seeing a few days of the market basically falling before basically pushing back up. XVX 500 will be the last pair that we'll talk about today. If we look at what's happening with XVX 500, it's pretty much the same thing. The market has pushed up to that daily push zone that we talked about, which was 3760. If you remain to be patient off of that, congratulations. You end up making all of that $3,000 that we end up talking about for its overall movement. Now, where's the next position that the market is going to go to? It's going to end up going to 3888. And currently right now, we're about 111 points from that position. At this particular point, we can see that the 2 hours solely in the sell zone. This is kind of basically giving the indication that we're really going to see a lot of selling going into this morning and this starting of trading. If we do see that, then once again, it's very predictable that it would happen. The question is, are you willing to be able to trade going against the overall direction of highest probability? If that's a yes, then know that when you end up placing in your sale, you try to get what you can, you get in, you get out, and then after that, you move on from there. If you're a little bit more conservative like I am, I'm only looking at being able to buy at this particular point. I'll wait for the market to be able to give me a low price, and then after that, I will look to be able to buy. But I know that buying is going to be very short when it comes down to this movement. All of the indices will probably not be in the best positions, probably until about a week or maybe two from now, based off of what I'm looking at for that overall position. Now, if you like what we end up doing for us overall trading and everything else like that, if you like what we end up doing when it came down to all of that, once again, please make sure that you end up liking the Carter Cow Capital business page, in which this is the first time that we end up live streaming on all three for us being able to go from there. Please make sure that you end up subscribing to Trade with Travis on YouTube. Also, please make sure that you end up giving a like to my overall personal page if you end up liking what we end up doing with that. We're going to do this each and every morning, once again, from 7 a.m. to 7:30, and then after that, we end up having a recap show a little bit later on today, which we end up being live, and we end up going from that overall position. Hopefully, I can be able to help you out when it comes down to overall trading, and hopefully this was something that was very easy to be able to go through and kind of learn along the way. If it wasn't easy to be able to learn along the way, I encourage you to be able to hop inside of one of our overall mini sessions that we end up doing each and every morning. All you have to do is just go to cartercowcapital.com/start here and be able to hop into one of those free sessions and be able to go from there. Like always, make sure that you end up planning your trading your plan. I see each and every one of y'all tomorrow as we look to be able to do some more